Let's bring in Ethan Harris, head of developed markets economics research at Bank of America Merrill Lynch, and ranked one of the most accurate forecasters by Bloomberg, making him a Bloomberg best. He joins us from his office here in New York. Ethan, welcome back to Bottom Line. Always a pleasure to have you on.
Thank you.
Ethan, let's just jump right into it. The Philadelphia Fed number. We were talking the Fed's general economic index, as Julie Hyman mentioned in the last block, dropping to minus 30.7 this month. What's your reaction to that number?
Well, I mean, clearly the economy is very weak right now, and like many forecasters were saying, there's a significant risk of recession. I don't think I'd hang my hat on the Philly Fed index. I mean, the Philadelphia Phillies are the best team in baseball, but the Philly Fed index is a minor league indicator.
Why do you say that?
Well, it's covering a few companies in the Philadelphia district. It's very much subject to sentiment. Remember when this survey was taken? It was the first half of this month. You couldn't have had a worse time to ask people about how they felt about the world with the debt downgrade, with all the dysfunction in Washington.
Yeah.
So I think it's telling us a lot about the anger the American public has about what's been going on in Washington.
Yeah.
And has a little bit of a negative economy message as well, but some of it is anger about politics.
Now, Ethan, there has been talk by some economists of the U.S. slipping into a new recession. President Obama addressed that topic last night during an interview on CBS. Let's hear some of the president's comments tonight. I'd like to get your thoughts.
I don't think we're in danger of another recession, but we are in danger of not having a recovery that's fast enough to deal with what is a genuine unemployment crisis for a whole lot of folks out there. And that's why we need to be doing more.
Ethan, what are your thoughts on the president's comments?
Well, I think that comment would have been right 6 months ago, that we were just not getting adequate growth. But I do think now there are real risks of recession. If I was the president, I wouldn't be going out and talking about recession risks. But yeah, in our view, 35% chance of recession in the next year.
Ethan, the Morgan Stanley report, when they downgraded, or at least said that they had some concerns about what was going on, they cut their global economic forecast. They wrote that U.S. and European economies are, quote, dangerously close to recession. They continued, again, quoting that it won't take much in the form of additional shocks to tip the balance. Are they right?
I think they are. I think it'll take a shock to tip us over, but we can see the kinds of shocks that we have to worry about. Certainly the most important would be a big escalation of the crisis in Europe. It's already damaging the stock markets. Right. That, of course, reverberates back on the U.S. economy. So I think they're right. You know, one significant further shock, and we could see a recession in both Europe and the U.S.
Ethan, the VIX index, that volatility gauge, it clearly shows the markets are in turmoil. Bloomberg senior economist Joe Brusuelas put out a note today, and it reads in part, quoting here, the theme that binds together the data deluge and the sell-off in global equity markets is a crisis of confidence. Americans' retirement accounts, their kids' college account, that rainy day money, and that future down payment for a house. When's the bleeding going to stop?
Well, I certainly agree that the VIX index is a nice kind of summary statistic on how nervous everyone is about the world. I think things will get a little better later in the year, as with the drop in oil prices, with the Japan supply chains coming back, with a little less negative news out of Washington, so things will get a little better, but I don't see real growth in the next 2 years.
Ethan, in our last 30 seconds, next week in Jackson Hole, Wyoming, at the Fed's annual economic conference, will Chairman Ben Bernanke take that opportunity to announce new measures to shore up the economy? What else can he do?
Well, there's not a lot left, frankly, in the Fed's playbook here. I think if the markets are quiet, we're not going to hear much at all from him. He'll simply reiterate what they just did, you know, with this extended period.
Right.
If the markets are really in deeper sell-off, though, he's sensitive to the fact that there's a confidence shock going on here, and we will hear a little more talk about options going forward, including this idea of Operation Twist, where you try to push down the long end of the yield curve.
Ethan Harris, head of developed markets economic research, Bank of America Merrill Lynch, joining us. Ethan, it's always a pleasure. Thanks so much.
Thank you.